Hello everyone and welcome back to XM.com. You are watching the weekly technical outlook video for the week starting Monday 20th. I'm Cristina Bartenido, investment analyst. Then on this video, I'll briefly discuss my analysis on dollar yen, pound dollar and Kiwi dollar. There's a central bank meeting in New Zealand. UK inflation data might move the British pound, while in the US, FOMC meeting minutes is the highlight of the calendar, but I believe that a couple of Fed speakers could create more volatility in the US dollar. So starting first with dollar yen, we can see that the pair avoided an outlook deterioration last week after rebounding near the 153.35 level. Weaker than expected inflation and retail sales data sent the pair to the downside, but those losses but the price managed to recover most of these losses and is currently back up to test this resistance, short-term resistance line near 156.20. The risk is still skewed to the upside. If you look at the R side, this is still above 50. The stochastic oscillator has also turned up, so there's potential for more upside in the coming sessions. And I would like to see a close above the 157 number and move back into this bullish channel in order to target again the 157.83 and 158.40 territory. If that proves easy to overcome, then the 159.70 region could be the next target. Though, given the risk of intervention in Japan, I would be a bit cautious about whether the pair will manage to reach that territory. We shouldn't forget that Japanese inflation data are also due on Friday, so the data could also provide some insight about whether a rate hike in Japan could happen given the recent negative GDP readings. Now, in case the pair moves back below the 20-day moving average, and more importantly below the 38.2% Fibonacci retracement of this uplook over here at 154.95, then more losses could follow. We may see another test near this important line, 153.35, while not far below that. This key ascending trend line from December's lows could also protect the market near the 153 level. If not, then the focus will shift towards the 61.8% Fibonacci of 151.70, where the price pivoted higher earlier this month. If that proves fragile too, then the focus will turn to this support line and towards the 150 psychological mark. The 200-day moving average could be also important to watch near this territory at 149.15. Now looking at Kiwi dollar, well, the Reserve Bank of New Zealand is not expected to change interest rates, but the slow progress on the inflation front might motivate some adjustments in forward guidance. It will be quite interesting to see whether policymakers will push back on rate cuts. If they appear hawkish than expected, then the pair might extend this impressive rebound above the 0.6140 territory, which coincides with a 38.2% Fibonacci retracement of this upleg that started in October and peaked in December. If we surpass that territory, then the price might head towards this 0.6175 level. That could be quite challenging, since this coincides with this falling constraining line coming from February 2023. Now, in the event of a pullback, it will be interesting to see whether the pair will pause at the lower band of this short-term bullish channel and closer to this former bearish channel both seen between 0.6050 and 0.6070. Failure to rebound here could squeeze the price towards the 0.60 psychological mark, where the 61.8% Fibonacci retracement is located. According to the technical indicators now, the recent rise in the price looks overdone given the overbought signal coming from the RSI and the stochastics. But in terms of trend signals remain encouraging following the break above this bearish channel, and given the fact that the price is currently moving inside the shorter term upward sloping channel. And finally, looking at pound dollar, which had an amazing session last week, we can see that the pair is currently trading around the slightly below the 1.27 number, where this resistance trend line from May 2021 is located. We need a break above that in order to reach the 1.2785 level and the upper band of this bullish channel. However, this week's data suggests a sharp slowdown in inflation readings and a slight slowdown in retail sales and flash services PMI figures. So if that proves the case, and if the data come worse than expected, we may see a pullback, which the technical indicators over here cannot rule out. We can see that the RSI is not far below its 70 overbought mark, while the stochastic oscillates already above 80. Nevertheless, if we see more gains in the market and a break above the 1.27 number, then the focus will turn to the 1.2785 number. Above that, I expect another key battle near 1.2855, where the price peaked back in March. If that proves easy to overcome, then a significant rally towards the 1.29 85, 1.30 territory could take place. Otherwise, a pullback could take us back to the 1.2612 level. Falling below that, the 200-day moving average and the lower band of this upper sloping channel could limit downside movement near 1.2560, while below that, the 1.25, 1.2460 territory could be another important region to watch. So that's all for this week's important FX pairs. Thank you for watching, and see you next time.